Alright guys, so we have come to today. So I've actually made a decision to backtest every day before to always come and backtest every day. Yes, so I want to gather data concerning the strategy that I've been trying to develop for the past 1 month now, if I'm not mistaken. So without wasting much of the time, let's just quickly dive to the strategy so that when I'm backtesting, you guys can follow up with the strategy. I don't really want this video to be that long, so if it's that long, I can cut it and maybe just start the session tomorrow, because I don't want the video to be that long. So if you know what I'm actually talking about. So the strategy is very simple. So I have above this zone right here, so all these zones that you see right here, it's an indicator, right? So it's the volume indicator. So actually use it to determine my range and the momentum of price, so that I can capitalize on the movement that price is actually making. So that's the volume indicator. So and here this is the Fibonacci, and with the Fibonacci I use the standard deviations of 1.618. then this is actually my buffer of my stop loss is minus 0.382 is my stop loss buffer if I'm in a trade. Then and this final here is 2.618, which is the final target of my TP in the standard deviation, right? So what I usually do, the kind of management I actually do is that I tend to move my SL to break even when price hits the standard deviation of 1.618. So that's just it. That's just it for this about the Fibonacci. So quick breakdown on the strategy. So a quick breakdown, a quick breakdown on the strategy. So let's go. So this strategy is actually alright. So that's BTC. So now what I actually trade is actually manipulation, right? Consolidation, right? Price, as you can see right here, price consolidated around this range, manipulated to take out the consolidation high, right? And after taking out the consolidation high, reverse the fair value gap, which shows that there is a sign of strength or a change in state of delivery, right here. As you see, fair value gap or change in state of delivery after liquidity has been swept, which may be either the high of this manipulation or any high that is within the manipulation. So if it is within the manipulation, it is also correct, provided there is a high that is within the manipulation or the new high of the accumulation, right, of the range. So once it's swept, then an inverse a fair value gap, then change the state of delivery, then I capitalize on my trade. I place my stop loss, my entry here, stop loss above the minus 2.82 standard deviation, and targeting 1:3, at least 1:3. But sometimes the standard deviation can actually give me just 1:2, but whatever it gives me, that's what I take. In this particular instances, we can see that it's 1:3.1. So my maximum target I target in the market is 1:3. So it's a strategy that I've been building. I just recently building it. So to also fit out the trend, I want to see all this happen right below the moving average. So as you can see right here is a moving average, right? So the moving average actually tells me the direction of the trend, right? On the 15 minutes time frame, I'll use one time frame, just the 15 minutes time frame. That's when I want to sell this. So below the moving average, right? Accumulation, manipulation, change the state of delivery, or inverse in fair value gap, mitigation, stop loss above here, then I target 1:618, right, as the standard deviation. Then I shift my stop loss to break even. The price actually gives the standard deviation of 2.618. So another thing I would like to see that to show that the manipulation is actually complete although it does not actually invalidate the trade, even though it's not there, but it's something that I like to see, right? It's also it also confirms that yes, the trend is this phase is actually has been manipulated, right? Especially when here has not been manipulated, right? Maybe it's a low that was manipulated inside here, then it's going to be compulsory. But if the here is already manipulated, then it's not actually compulsory. So, but if it's a low that is manipulated within the range, that's what I also like to see, whether outside or within, right? Depending on the context, that's when to show that whether it's compulsory or not. So, what I like to see is a volume, is a divergence between the volume and the assets, right? So I trade just so I want to see price take out this high on the assets, while volume is actually giving us a divergence, right? It's not taking out the high, you can see. So price did not take out the high, and price took out this high, and before changing the state of the behavior shows that there's a sign of strength, that sellers are actually involved in the market. Then take the price down to the standard deviation. So that is just all about this strategy. So for context, right, let me shift it right now, right here. So for context, right, so it's just the standard accumulation, manipulation, and distribution, you understand. So I just added indicator to filter out some things and to also know when the accumulation has started and when the accumulation has ended. So I'm going to dive deep into the strategy more. If the strategy really works. If you want me to dive deep into the strategy more, to break it down on how I actually take trades and using the strategy, so you can just comment in the comment section. But I'm just doing this to actually, so that when I'm backtesting, so that you guys can follow. So I'm doing the backtesting challenge. So I want to challenge myself to gather more data on this, of which I've started. So, but I just want to document it online. So that's for that. Now let me show you guys the example of the trade that I took while backtesting. So as you can see right here, the same example right here, right? Let's do it so quick, so you can see. So the same examples right here. So you can see that price was above first condition. Price was above the moving average, right? This one is a buy setup, right? Price was above the moving average. So what happened? Price actually manipulated below without closing below. Now another thing is that I don't want the candle closure of the 15 minutes, which is the time frame that I'm actually doing the analysis and also taking the entry. I don't want the candle to close below the moving average. Otherwise, if it closes below the moving average, it invalidates the setup. So I have to wait again for another accumulation, manipulation without closing below. Anything that makes it close below, then is invalidated. I have to restart again, waiting for another accumulation, manipulation, and distribution. So that's just that, so that you guys will know what validates and actually invalidates the trade. So now we can see right here, this is the box that price actually consolidated. So we can see right here that price was actually in a consolidation phase, right, on the trend. So you can see price was consolidating. All of a sudden price went down, manipulated this low, and after manipulating this low, then price passed this fair value gap. Price was still showing, while the volume was still showing that says price was actually active as at the point when price passed the fair value gap. Then what happened next is that we took a trade, right? So volume was showing strength, right, because price inverts this fair value gap and volume was also showing strength. So we took a trade, plotting the fee from the standard derivative from the manipulation, the high that we want to target, down to the value of the candle where the manipulation stops. Then got our standard derivative. Then I entered, placed my stop loss below this swing goal right here, which is also the protected standard derivative that I initially wanted to place that is the rule that the place where I usually place the stop loss, right, based on the rule. So then targets this high as first take profit, second take profit, and take profit of about 1:2. So you can see inverse in fair value gap. So price was above, did not close below this, reversed the fair value gap while price was showing strength. And also, if you could see right here, you can also see a divergence, right? So you can see that price actually took out this low, but on the chart, price did not take it out. It was creating a higher high. So gold was creating a higher high while divergence was actually creating a lower high, which shows that there's a smart money reversals playing out, right, based on the indicator, because it's an oscillator and it's also a leading indicator too. So having done that, I placed my entry and target here. So price moved. Well, okay, let me show you guys the results of the trade. Let me show you guys the results. Sorry. Alright, so you can see the result right here. I think this is also the result. Never mind anyway. So you can see the result right here, right? So price actually came down. Market execute immediately. Price came down, right? Took a couple of while before price actually went to take profit. So immediately price actually crossed this line, right? Set my stop loss to break even, and then the rest was actually history. So price actually take profits of the trade. So you can see it right there. So another example again. I've closed. Sorry, I've closed Notion. I've closed my Notion app. I'm sorry. So let's quickly dive into the other examples. I need to quickly grab it right here. I think I mistakenly closed this. Okay, so I wanted to show you guys another examples, right? So let me just quickly take this up. So you can see this the same setup right here. You can see, but this one is on the upside. So I'll quickly show you guys another example. So this is one of my models anyway that I'm working on. I have two models that I'm actually working on. So this is just one of them. And yeah, I've been testing it for quite some time now. So it's actually testing it, refining it, and a lot of things. So let me show you guys the other trade. I've not actually taken any short trade that I can show you guys. No shorts yet. So gold has been bullish, like the part that I've been testing. So that's the reason why. Okay, look at this one. Let me show you guys this one again. So you can see right here too. So you can see right here we have price was. This is the EMA right here. I don't know if you can see, but you can see this blue line that is up. So this is the EMA right here. So price was above the EMA, right? So price actually created some sort of like a accumulation, which is arranging our range. The price manipulated the range, then actually price reversed the fair value gap right here, and also changed the state of the day right here. So with this inverse of fair value gap is where I just enter my trade on market execution. But however, I did not see this inversion on time, so I actually when I saw this change state of the level, that's when I knew that price inverse value gap. So otherwise, this is the place that I would have entered. So the price has not taken out the high, the high that the targets, right, which is here. We have this here. We have this here. Then standard derivative, then stop loss below the protected low, right, which is also which also seems to be the safe place for the divergence, the volume divergence, right. So you can see right here that price was creating a higher high right here, while the volume was actually creating a lower, like taking out all this high that price has already created. So we use this as the volume divergence, and then we got our standard deviation of 2.618 and for this to the result of 3. So when price actually got to this 1.618, then we shift our stop loss to break even, and then we let the trade run. So let me show you guys the result of this trade. Alright. So yeah, so this is the result of this trade. So you can see right here that price just ran through to take profit. So that's just it for this trade. So that's it guys. I think this video is getting too long, so starting from tomorrow I'm going to post on other video concerning this session, and I even posted this night, right? And I posted this night, so I don't want this video to be too long. So this is just the video just explaining the strategy that I'm going to be backtesting for throughout this year. One of the strategies that I will backtesting throughout this year, right? So I get enough and sufficient data, then I can now then go to the live trade. So if you want to join with the results to know how this goes, so you can just click the follow button, the subscribe button, right? Click the subscribe button so you can always see me, and turn on the notification bell so that when I post the videos you can always see how I test and the result of the strategy and everything, so you can follow for the journey. So you can also learn a lot if you are also the person that trades ICT and using the power of theory concept, right? So you also learn a lot trading strategy. So I just use this, it's just the same thing. So I just used created it, tried to add some filters to it and some conditions so that I can execute my trade perfectly, right, without any doubt, using one time frame. So I've been working on it. So that's just it guys. So see you guys in the next video. Alright, so peace out.